The US dollar DXY index is over 100 again. And I told you this would happen. But here's the fun part. I'm going all in on emerging markets. While I do think that the US is a fantastic store of value, and it's the predominant store of value, hence why the DXY is over 100. I believe there are better opportunities to buy when there is blood in the streets, when the shots are ringing out, than fleeing to safer pastures. The grass is always greener on the other side, except not when the other side is also slowly bleeding out. For me, I've always been a value investor. I've always predominantly checked the balance sheet. I've predominantly checked cash flow statements. I've always checked whether or not there's viability in an economy. And I think you've seen this on my channel. So if you appreciate that, feel free to go down and subscribe. And if you are new here, hello and welcome back to Travel Reports. But realistically, what you get in especially places outside of the US is valuations against the dollar are depressed. And especially with the DXY going up day after day, which I told you it would do. I've been telling you for months, because realistically, I have no problems if it does go up. I have no problems if it goes down, because I am truly diversified. I am one with my revenue. I am one with my diversification of revenue. And that's a principle I have running my business, is not necessarily diversification of industry, but diversification of cash flow and where that cash flow is coming from. It's geographic diversity. And I think this is something that people don't realize, right? People think that there's black and white, but the world is a shade of gray. It is a place where you can get outsized returns in leg. You can get outsized returns in Swiss francs. You can get outsized returns in zloty. But you cannot expect people to not flow back to safe havens. And even I keep some US dollar reserves. And actually, I'm going to Latin America here within probably the next year to spend some time in Latin America, spend some time learning about banking in Latin America, and I plan to open a bank in Ecuador. Why am I banking in Ecuador? Well, the predominant reason is it's a great way to diversify geographically, and additionally, there's very good rates on dollar deposits. Now, am I going to have to fly back to Ecuador to get out my money? Absolutely, absolutely. But you look at the structural strength of the dollar, and I've been saying this over and over, but I'll pound it back into you. The structural strength of the dollar, of the US dollar, has never gone away. And in fact, it's never been stronger. Barring times like the 1980s, where they literally had to structurally weaken it. And there are many economists that are saying that the US needs to weaken the dollar, because if they weaken the dollar, they can pay off debt easier. And of course, that is something that the US is concerned about, defaulting on debt. Not necessarily because of foreign actors, it's because there would be mass unrest amongst Americans. American citizens own around 80% of all outstanding US debt. That means that of, I don't know how much, I think it's 36, 40, $50 trillion, whatever the number is, 80%, 80 cents on the dollar is owned by American citizens. Now, a predominant amount of that debt is owned by the top 10%, which is actually not doing that well. Predictably, people within that bottom half of US society are invariably having issues, but those are predictable issues. And this is happening worldwide, slowly unraveling, albeit the US is actually growing at a rate I didn't expect. But the structural facts of the US dollar, the structural facts of the US in more broad terms, haven't changed. They did since 2019, and that was that the US printed dollars. But it's been quantitative tightening for quite some time. And many in the US public actually want more printing because the debt is seen as unsustainable at 120% debt to GDP. But for me, what I see going through emerging markets and tying this back to emerging markets is a structural gold mine for downward pressure on emerging market assets, downward pressure on great deals, especially in places like Southeast Asia, beyond Southeast Asia, which I think is great for banking, especially places like Thailand, like Cambodia, which isn't a place that many people realize has pretty good banking. Vietnam, even to a lesser extent East Asia, right? You have South Korea, Japan, and these are very good banking destinations. But those are developed markets, so I'm kind of getting into the weeds there. What you get from developing markets right now is extreme depression of valuation and deflationary pressures that are driving down costs, not propping them up. And so, especially with Chinese investments being far less free than it once was, what you get is a confluence of the dollar strengthening and these currencies weakening. And essentially what you get is a giant opportunity, perhaps once in a lifetime, to buy up assets for 10 years. I think within the next 10 years, the US dollar will be at its peak, just like the Great British Pound in the 1800s. And then after that 10 years, if you had bought into these markets, into the Philippines, into Pakistan, Bangladesh, which I find those markets to be massively undervalued, while they look structurally weak, while they look weak in infrastructure, over 10 years, they're going to grow in infrastructure, but they're also going to grow against the dollar. And that's something that not many people realize, is that you should be betting on emerging markets. Now, this was my own thesis. Of course, do your own research. If you'd like me to do some research for you on a jurisdiction that you would be best suited for, feel free to drop into the description down below, and I will give you a jurisdictional one-pager to go over your specific best jurisdiction on the basis of your selections. If you are looking for perhaps consulting services, starting December 1st, 2025, you have to buy a jurisdictional one-pager to get access to consulting services. If you are a pre-existing consulting client, your grandfather starting December 1st, our consulting services have gotten a lot of potential clients, so I'm having to restrict the totality of consulting services. That said, this has been the Travel Report, signing off.